Now, besides the New York Stock Exchange, security trading is also carried out on the Amex, or American Stock Exchange. Also, regional exchanges. Now, the Amex and regional exchanges are arranged in many respects like the New York Stock Exchange. However, trading volume is much less. But recently, very high volumes have been traded over the counter. This trading is conducted with the help of a computer network system. The volume of the OTC market comes close to that traded on the New York Stock Exchange. Furthermore, securities of some of the largest companies like Intel or Microsoft are quoted primarily on the OTC market. Now, the OTC market. The sale and purchase of securities here is carried out directly by dealers and brokers. A dealer is a market participant that's engaged in the purchase and sale of securities for their own accounts. And a broker is a market participant that buys and sells securities for a third party and operates on behalf of the dealer. Now, all stocks receive a quotation on the OTC market via one of two quoting systems. Either the National Association of Securities Dealers Automated Quotation System, or more simply NASDAQ, which represents the computer network joining the dealers and the brokers of the OTC market, or the pink sheets, which are daily publications reporting the prices and purchases and sales as listed by the National Quotation Bureau. In the pink sheets, the quotes of stocks which were not included in NASDAQ are published. Now, remember, a quotation is the highest price to purchase and the lowest price to sell a stock at a given moment in the market. The purchase and sale of small numbers of shares, up to 1,000 pieces, NASDAQ, is carried out with the help of a separate computer network system. It is called the Small Orders Execution System, or SOES. In the NASDAQ system, so-called limit orders are not accepted. Only the orders for a purchase or sale at the quoted price will be executed. However, the SOES allows for the execution of both market and limit orders, provided that the size of the order is small, no more than 1,000 shares. The various types of market orders will be addressed in later chapters. Now, Let's take a look at clearing and insurance. The purchase and sale of securities assumes change of ownership. It would follow that with each change of ownership, the security should be transferred into the name of the buyer and sent to them. In the present situation, in which millions of shares are transferred from sellers to buyers daily, if actual physical transference of the securities were required, the overall performance of capital markets would be very low, or perhaps non-existent. Now, to avoid the difficulties connected with the physical transmission of securities to new owners, 3 procedures are followed. 1. The shares are registered in the name of the broker rather than in the name of the buyers, because average investors must use brokerage offices for the purchase and sale of securities. In this case, it is said that the securities are held in the street name. When the shares are held in the street name, the issuer of the securities records the brokerage as the registered owner or holder of record. The real buyer, who is the client of the brokerage, is considered the beneficial owner. Procedure 2. The use of clearinghouses. The centralized clearinghouse, which is controlled by the National Securities Clearing Corporation, handles the trades at the New York Stock Exchange, the Amex, and the OTC. Due to the use of clearinghouses, the physical transference of securities is replaced by the appropriate records in the registries of brokerages who are members of clearinghouses. And procedure 3. The stock certificates are removed from circulation by the depository trust company, which records electronically title of ownership. When the client of one brokerage sells securities to the client of another brokerage, rather than the physical transference of the certificates, the seller's account is debited and the buyer's account is credited. Now, let's take a look at the Securities Investors Protection Act of 1970. This established the Securities Investor Protection Corporation, or SIPC. The SIPC insures clients' accounts against possible losses resulting from brokerage error up to the amount of $500,000 per investor. However, accounts are usually insured to a much greater extent through private insurance companies. In this section of the course, we're going to look at the different types of securities. There are 4 different types of securities. common stock, fixed income securities, standardized listed options or SLOs, and futures. We'll start off by looking at common stock. Common stock is a security which grants the right of ownership in a corporation. If a company issues 1 million shares of common stock and you were to purchase 1,000 shares, you would own 1/1000th of this company. Now, each share of common stock has two types of value. Par value is the price which is fixed to the common stock the moment it is released on the market. And market value is the price of a common stock traded on the market. This price is determined by supply and demand. As a rule, the market value exceeds par value. Market value is the price at which shares of common stock are bought and sold in exchanges. Now, shares of ownership in a company can be in the hands of a closed circle of individuals. Such companies are called private companies. For a company to make its shares available to investors, it must go through the process of conversion into a public company, as was described previously. Now, in buying common stock of a company, an investor expects to receive a certain return. Through what means can this return be realized? Well, common stock has two ways of providing profit to an investor. The first is dividends. Dividends are part of the net profit of a company, which is allocated by the board of directors for distribution among the shareholders. Now, dividends can be paid in three forms. The first is a fixed cash sum on each share belonging to the shareholder. The dividends are usually paid quarterly. The day when the payment of the dividend is declared is called the date of declaration. The day when payment is made to the stockholders of record is called date of record. To decide which shareholders are entitled to receive a dividend payment, a certain cutoff date is declared, called the ex-dividend date. As a rule, the ex-dividend date is set 4 working days prior to the date of record. If the investor purchased shares before the ex-dividend date, they will receive dividend payments. Those who purchase them on or after the ex-dividend date do not receive them. The next is a stock dividend. In this case, the dividend is not paid in cash, but in additional shares of the company. Let's assume the stock dividend is declared at 10%. If the investor has 100 shares, they will receive an additional 10 shares of this company. The next is a stock split. Let's assume the investor bought 100 shares of a company with a market value of $50 per share. After a stock split with a 1-to-2 ratio, the investor will have 200 shares. However, their market value will decrease by half, and each share will now be worth $25. The next section we're going to look at is capital growth. Capital growth is an increase in the market value of common stock. All common stock can be divided into two groups, depending on which cash flow prevails, either dividends or capital growth. Value stocks are financially solid securities on which dividends are paid regularly. As a rule, these securities are issued by highly reputed companies that have a history of reliability and consistent performance. The other is growth stock. Growth stocks are those securities which have strong potential for increase in their value. Bear in mind that dividends and capital growth are not guarantees. A company's performance, a drop in profits, or reinvestment of profits can affect them. This is yet another financial risk that investors face. Now let's take a look at an example. Let's say that we've purchased 1,000 shares of XYZ stock at $20 each, making our total investment $20,000. Over the course of 3 months, the shares of XYZ have increased to a value of, let's say, $23. During this period of time, XYZ also paid dividends of 44 cents per share. So let's see how our income will be affected by these events. First, we take the dividends times the number of shares we own, giving us a total of $440. Now for the growth. $1,000 shares of XYZ stock at the current value of $23 per share times 1,000 shares equals $23,000. So our total at this point is $23,440. To find out what our exact profit is, we minus 20 from 23, and multiply by 1,000. This equals $3,000. That's the money we receive as profit from the growth of the stock. Then we add that to the dividends, giving us a total profit over 3 months of $3,440. This is a return of 17.2% for the period of 3 months, or a 68.8% annualized return. Now, things could have developed differently, but we'll keep this in a positive frame for the time being. Now let's take a look at common stock symbols. Common stock, as well as other securities, have symbols. These symbols are abbreviations of company names used when listing the prices of common stock in such places as newspapers, ticker boards, and exchanges, or when placing orders with brokers. Now, the symbols consist of from 1 to 5 characters. And as an example, we're going to run through a list of the 30 blue chip companies that comprise the most famous market index, the Dow Jones Industrial Index. We start our brief tour with Minnesota Mining and Manufacturing. Its symbol is MMM. You'll notice at the bottom right of each screen there will be the web page address for the company. The next is Allied Signal, symbol ALD. Next, Aluminum Company of America, or Alcoa, symbol AA. American Express, symbol AXP. AT&T, symbol T. Boeing, symbol BA. Caterpillar, symbol CAT. Chevron, symbol CHV. Coca-Cola, symbol KO. Walt Disney, symbol DIS. EI DuPont, symbol DD. Eastman Kodak, symbol EK. Exxon, symbol XON. General Electric, symbol GE. General Motors, symbol GM. Goodyear Tire and Rubber, symbol GT. Hewlett-Packard, symbol HWP. IBM, symbol IBM. International Paper, symbol IP. Johnson & Johnson, symbol JNJ. McDonald's, symbol MCD. Merck & Company, symbol MRK. JP Morgan, symbol JPM. Philip Morris, symbol MO. Procter & Gamble, symbol PG. Sears Roebuck & Company, symbol S. Travelers Group, symbol TRV. Union Carbide, symbol UK. United Technologies, symbol UTX. Walmart is our last, symbol WMT.